Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy, and today on Monday, January 27th, pretty unusual day. Now here I have my trading zone drawn out, support down at 61.33 and resistance at 61.72, and the previous close, Friday's closed, down at 61.3250. And where are the prices? Now as you know, the trading zone gives a pretty good approximation of where prices are likely to trade. But here, most unusual, prices don't even show in the picture. So where are the prices? So as you can see, my chart includes the stochastics down here. So stochastics are printed. Where are the prices? So for that, I'm going to go back to Friday. Okay, here's the Friday chart, January 24th, and prices closed the day right about here at 61.33, which is where I marked on my chart the previous day's close was for a gap trade possibility. So right here, this is where on my chart. So where are the prices? So prices closed for the weekend and they opened up, and here they opened up after the weekend, after our session, and I'm going to trace the prices back toward Monday, and prices are way down here, and on Monday, here we are, January 27th, here are the prices, and my trading zone is way up here. So of course something happened to bring prices down, and of course it was the announcement of the Chinese artificial intelligence, what's the name of it? DeepSeek. Amazingly enough, DeepSeek, from early reports, is better than ChatGPT, and the Chinese developers say that they developed it for $6 million. What's that? $6 million. Now, the ChatGPT, the Elon Musk AI, I don't know the name of that, these were developed at a cost of tens of millions of dollars. And Donald Trump just announced an initiative to develop an American brand of artificial intelligence for $500 billion. $500 billion. And the Chinese just released this DeepSeek for $6 million that they say they developed, it cost them to develop it. Unbelievable. So does that give you an indication of how oversold the market is? Now, artificial intelligence may be great. It might even replace us humans, but the developers so far haven't found a way to monetize it. So pretty interesting. Anyway, let's go back to the chart to see what we can learn and how to trade it. So when the market trades like this, away from the trading zone, as you know, I transpose the trading zone, and I did that here on Monday, and I have it off, but I'm going to turn it back on. Okay, there we go. Turn it back on, and here's the transposed trading zone. And so the market opened right at the bottom of the trading zone, immediately shot up, but basically traded within the trading zone all day, okay? But nevertheless, on a day like this, we don't want to do any trading because, after all, when the market is so erratic, when it opens so far away from previous close, it's a good idea to just let the dust settle until the norms are established. By norms, I mean trading averages, because I like numbers, and the Taylor calculator, which I believe in, is based on numbers, as is the stochastics, which you see on my chart down here. And so the stochastics, the trading zone, and the previous day's close are the only indicators I have on my chart. And so what's coming up in the week ahead? Well, in the week ahead, there is a Fed meeting, the FOMC meeting, and here's my calendar. I always check the market calendar, the economic calendar, to see what announcements are going to be made. And here on Wednesday, January 29th, right over here, 2 p.m., FOMC interest rate decision. Remember, FOMC interest rate decision is where the Federal Reserve is going to announce interest rates. And interest rate changes have a huge effect in the stock market. And so generally, my advice, at least to the people who've taken my course, and if you're wise, maybe you'll learn something, if you trade the S&P, or if you trade at all, day trade, don't trade on FOMC day. At least learn how the market trades on FOMC day. And typically, an average FOMC day is the market trades within a fairly narrow range in the morning, and around 1:30, the market starts to gyrate a little bit up and down, and then at about 2 o'clock, when the announcement is made, the market gyrates wildly, 100 points in either direction, and who knows where it's going to go. So stay away from the market on FOMC announcement days, because you can make a lot of money very fast. You can lose a lot of money very fast. And remember, the name of the game in trading is don't lose money. The name of the game is not to make money. The name of the game is don't lose money, because if you don't lose money, the only other two things that can happen is you break even or you make money, okay? So you've got a 66 2/3% chance of being right. Win, break even, lose. You don't want to lose. Okay, so which way is the Fed going to go on Wednesday? How are they going to make the announcement? What are they going to do for interest rates? And so for that, we go to the CME Fed Watch tool, and rates now are set at 4.25 to 4.50. And the prediction is there's a 97.3% chance that the Fed is going to hold interest rates steady at 4.25 to 4.50. And so probably not a lot will happen on or after, or just before and after, the interest rate decision. Of course, the traders, the computers are going to want to make money on the inevitable vacillation when the 2 o'clock announcement is made, but it's probably going to settle at just about where it was prior to the announcement. Anyway, if you're smart, you won't trade on Wednesday, or at least not after 11 a.m. At any rate, so today, again, the trading zone was way up here. I transposed it. It's down here. Tomorrow, on Tuesday, January 28th, we'll see where the market trades. Now, in the big picture, let me just show you the big picture on the S&P. Gaps, as you know, always close. Okay, so here was a gap that closed today. Here was Monday's trading, Monday's candle. As you can see, it opened up. It opened to the upside, but it opened way down from where it closed on Friday up here. And so there's a big gap down here at 58.55. Another gap opening up way down here. So there's gaps to the upside, there's gaps to the downside. I sort of feel that the gap to the downside is going to close before this one will, but we'll see where the market goes. But nevertheless, be careful this week. The market has to reestablish itself, and it will establish itself somewhere within this range. I'm fairly confident. Trade safely, use lots of patience. If you want to get your copy of the Taylor Trading Calculator, you can get that at my site at timelessdollar.com. So let's see what happens tomorrow when the market opens. Thanks so much for watching. This is Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.